everybody, it is Mark Yegge. Welcome to another weekly stock market update. Just a quickie for you today because, gosh, there's not a lot of good news going on, which tells me that usually when there's not a lot of good news, like there's a ton of bad news, it's almost all out. And now we're going to start getting some good news and the market's going to start going up. But this has been a bloodbath just of late, just in a few different things that we're in. And I know people are in, and I've been hearing some complaints. And if you listen to the shows, everybody's thinking the market's going to go to zero and whatever. Anyway, there's a lot of that that's true this week. But there's a lot of it that's just hype, trying to sell ads on TV. So let's talk about it. We got 4 red lights in the market. The market looks like it's trying to kind of recover a little bit, but it's red. Like that chart that you see right there, hopefully you see that on your screen. That's a downtrend. There's no question about it. That's not a trend that you want to be in, or you want to be very protected. Like we tell all of our students, be protected during these markets. And we show you these market indicators, 4 red lights on this screen, basically telling you it's red, be careful. And we've been saying it, well, you know, most of the last couple of weeks. All right. So we got that going on. We've got the NASDAQ. And the reason you see NASDAQ circled is because it's trading below the 50-day moving average with a gap down in the middle of that. And it tried to fill that gap earlier today, couldn't get in there. And so I suspect it's going to have a lot of trouble filling that gap. What's the price of that gap? It looks like about 13,000, almost 400. And if it doesn't fill that gap with volume, I mean, I think we're looking at going to the 200-day moving average, which is that black line there. So, you know, trouble in paradise in the market, certainly with the government shutdown, which is part of the bad news. We're not bullish anytime anytime soon. All right, that's the S&P 500. Looks like the same chart, doesn't it? Gap down right around the $4,400 level. It didn't even try to fill the gap. This is just on a downtrend. It wants to go fill that, go to that $4,200 level, which is the 200-day moving average. That's, I suspect, where it's going. That's where the energy looks like it's taking us. What do I know? Just a guy that reads charts. Dow Jones Industrial Average. This one is in more trouble. This is below the 200-day moving average for the whole week practically. Tried to get up above it a couple times, couldn't handle it, and now it's back down, and not good stuff happens when the markets are down on the Dow, especially below the 200-day moving average. So you got to watch that, be careful. The the New York Stock Exchange Composite Index, again, looks like the same chart. Below its 200-day moving average, it's in a little bit of trouble. It couldn't hold any of the tests that it made last week to try to keep that 200-day moving average, and now it's below it. The volatility index, you can see it spiking. When the volatility index spikes, that means money comes out of the market. Sorry. And that's a bummer. And so it's trying to get above its 200-day moving average. And if it does that, this is like the inverse thing. If it's above its 200-day moving average, that's bad. And this has kind of tried to go above its 200-day moving average. So it's got to trend a little bit back toward the mean. And now a little bit of trend towards spiking up. So we got to watch out for that. And this is something I keep pointing out just over the last several weeks. I'm like, there's trouble in the airline index. Trouble in the airline index. Gone from 80 to 55, right? 54. That's a pretty significant decline. And if you look at this red line crossing through the black line, that's called the death cross. That'll probably happen Monday, Tuesday. And that means there's a lot of selling going on in the airline index, and it's a big downtrend happening. Why? Well, 32% of a stock's performance comes from the performance of its sector and industry. Let's take a look at some of the stocks in the airline industry. Southwest Airlines, 39 down to 27. Percentage-wise, that's a pretty big move. And look at it, it's like a ski slope. A big gap down here at 35, and then just a slide all the way down with not a lot of ways to recover. Delta Airlines, kind of a bunny slope, but still going down, gap down on earnings right after earnings, back around the same time in July. And it's just been kind of lollygagging and going down from 50 to 37. American Airlines, I put it on a weekly now. You see a death cross happening, American Airlines right there. You see a steep black diamond, double black diamond, slope. You see declining sales down here on the left, gone from 183%. Now, a lot of this is because nobody was traveling during COVID, and then it started to ramp up. So their sales ramped up, and now there's weakness in sales. So it's kind of ramping back down. And then United Airlines looks like the same thing. So trouble in the airline industry, and I don't know exactly why. Planes seem to still be full, but some of the resorts are reporting that they're empty. And, you know, who knows? Anyway, don't want to belabor all the stuff going on the negative side, because there's always a bull market around the corner. But you need to be aware that when there's a bear market, you need to be kind of, I'm not saying this is a bear market. That's a wrong term. I'm saying when there's a downturn or a correction, you need to be prepared, because if you dig a hole, trust me, I know this, right? If you dig a hole, you got to fill the hole back in. And so the best you could do is try to avoid filling the hole. Now, sometimes you can't, or digging the hole. Sometimes you can't avoid digging the hole. Sometimes that's just the way it goes. And if you're bullish on certain stocks and you're bullish on certain sectors, you kind of got to power through those sometimes. Otherwise, you miss those big ups if you're in cash. So you can't always time the market perfectly. What you can do is you can be in the market and use a system to collect money from the gamblers out there. We have it. It's called the cash flow machine. And the gamblers out there are the ones that are willing to pay you for the right to buy your stock. And you sell them an option and you make money on that option while you wait for your stock to go back up. It's a slightly different strategy. It's a little bit more nuanced, but that's what we do. Anyway, listen, I hope you have a fantastic weekend. Thanks for checking in here. I hope these stock market updates are valuable for you. There's a green market around the corner. I just don't know when it is. It could be the day they announce that the markets, the government's going to open back up again and everything is great, or the Fed lowers rates again. Who knows? There's always some kind of a news driver that they try to pin it on, but the market's going to be going up at some point. Right now it's red. Be careful, and I'll see you on the next stock market update. Take care.